Good morning, good afternoon, good evening, wherever you may be across the world. Today's session, as I said, is the second webinar that we're hosting, which is an educational webinar. And it's about developing the perfect pitch. So whether you're a startup, a VC, an entrepreneur, established fund, you all need to raise capital. And one of the things that you need to do to raise capital is to pitch your business idea. And you can do that obviously verbally in a 30-second elevator pitch or in person in a meeting, but you also need to have material to share that with. So a pitch deck is often used and is an important tool in raising capital. Or potentially, if you're an investor out there, I think there's an opportunity for you to hear what a pitch deck is about, to see what you can look for, what are some of the things that an entrepreneur or a startup should be shown before you invest. So just a quick disclaimer, this content presented in this webinar is for informational, educational purpose only. It does not constitute financial, legal, and investment advice. Any examples discussed are illustrated should not be considered recommendations. Attendees are encouraged to seek independent professional advice before making any investment decisions. Remember, all investments carry risks, and past performance is not indicative of future results. So yeah, we're a platform that's helping we're almost like a marriage counselor, bringing parties together, or a matchmaker. We're not giving advice. So the agenda today. So just to touch on the introduction, the welcome. Ajay Lalu is our special guest today. You can see him on screen. He's a seasoned entrepreneur, innovator of the year, successfully started several enterprises. He's an advisor and a mentor to many startups. And in fact, AJ was involved it's still involved with the Wealth Creation chapter, and was involved right in the beginning with Adrian and Nick when they started this. And it's great to have him back involved. Maybe you want to just give a little bit of an intro to yourself, AJ, and then we can crack on.
Hi, everybody. Jason, thanks very much. I'm Ajay Lalu, a chartered accountant by profession, but don't hold that against me. I have been in the M&A space with Ernst& Young for many years, did my own empowerment transaction, like you said, several startups, most recently a tech startup, which has raised capital successfully from a venture capital outfit called E Squared. And yeah, just my first venture into tech. And so it's been an absolute eye opener and enjoying it, absolutely thoroughly enjoying it. So, but yeah, that's enough about me.
Good, great. Well, we're going to hear lots about you and from you in a short while. So thanks for the intro. So the agenda for today, before we get into, AJ's going to share some of his real life examples on a pitch deck, and it's going to be great to hear from him. But we thought that we would give everyone on the webinar a bit of a foundation of a pitch deck. So just a little bit of theory, and AJ will touch on that and come back to the foundation of a pitch deck when he's talking through his slides. Then we'll go into real life examples. We'll give a couple of tips for investors. So if you are an investor on the webinar, what should you look for in a pitch deck? And then we'll have a Q&A session. So the Q&A should be live right now. So please, don't hesitate. Put your questions into the Q&A chat box there, not into the chat box. I think there is a separate Q&A. So please put your questions in there, and we'll try and answer those. And then we'll do a short closing. But I think let's crack on and let's talk about a pitch deck and how important it is to have a pitch deck. And I think before getting into your slides, AJ, maybe just give the listeners an overview of I've touched on it a little bit and how important it is, but maybe the purpose of a pitch deck in a little bit more detail.
Thanks, Jason. So, I think most startups make the kind of mistake thinking that your pitch deck is your business plan, right? And I think you have to separate the two. A pitch deck is literally there to introduce you to potential investors, right? It's the hook. It's meant to, grab the attention of an investor that invites you to a meeting, right? So it's not the 20 slides that you're going to use that gets an investor to write out the check, right? It's never ever happened, and I don't think it ever will, right? So if you're an
Mm.
investor,
Yeah.
you get hundreds and thousands of pitch decks, and literally you have to sift through these to decide which ones are worthy of your attention, firstly, and secondly, potentially worthy of your investment, right? So, but as a startup, your pitch deck is only there to be the hook. It's there to whet the
Yeah.
appetite. It's there to secure you a meeting, potentially with investors, but it's not the thing that gets people to write out a check.
Yeah, and I think the hook is important. I think you know we don't realize how investors out there get inundated with opportunities, and you've got to differentiate yourself. You've got to have something. You've got to be that hook. And if you're off, and it sounds like we will go through it like what you were doing in some of your previous decks. But yeah, the hook is the great way to phrase the purpose of a deck and get that next meeting. To get a meeting is the goal.
Absolutely.
So then just in terms of a pitch deck, I mean it's not a one pager. You know, I think if you have a one pager, then you'll probably be missing some information. But what are some of the key slides that one would need to use to create that hook?
Look, I think it depends on where you are in the evolution of your startup, right? If you're at that early ideation stage, your pitch deck looks quite different to somebody that's revenue generating and so forth, right? But I think
Yeah,
the key ingredients that you want to present to a potential investor, um, you know, what is the problem that you're solving, right? So, what is the problem statement? You
yeah,
got to talk a bit about your solution. You got to talk a bit about your team. You got to talk a bit about your traction. You've got to talk a bit about, the financials. What are you looking for? How much are you planning to raise? And then, what are the kind of return potentials? You got to talk about the market and what is the size of that market? What is your addressable size of or portion of that market? Um, Talk about your team, your experience, past exits and so forth, if you've got any. So it does vary, but I think there's certain common things that you need to have in your pitch deck. Who you are, what do you do, what's the problem that you solve, what is the problem you're solving, how do you solve that problem, how do you make money, what is your business model, um, how much are you looking to raise,
yeah,
etc. So I think
yeah.
that's the kind of key ingredients that one typically has in a pitch deck.
Yeah, okay. And I mean you can elaborate on that a little bit later, but also I think one thing you mentioned when you answered this was every pitch deck may be different depending on what you're doing. And I think this is also you may have a backbone or a skeleton of a pitch deck, but you may have to customize that depending on who you're speaking to. And maybe they have different focuses. So I think that's something also that I've learned over the years in putting pitch decks together. If you're talking to an institution versus a high net worth individual, just for argument's sake, your decks may look a little bit different.
Well,
Great. Yeah.
also, Jason, just on this, right? I mean, we had several pitch decks, right? We had a elevator pitch deck, which was literally 3 or 4 slides, and highly, highly condensed information. But all of that information that I've just outlined was in there, but extremely condensed. Then we
Yeah.
had
Like
a sort of a 3 minute pitch deck, and a
yes, a
5 minute pitch deck
teaser.
and a 10 minute, right?
Yeah. Yeah.
And it's variations of content, but the content was generally always consistent.
Yeah, yeah, it's all the thread is the same. I think also just something else in terms of and maybe not maybe it's something that we'll touch on later, but that also you need to have decks that are for different devices. So you need to have a mobile deck that would be easily transferable via WhatsApp. It's not going to block. So and it must be readable on the phone. So I think you need to have different tech kind of, or what's the word? I've lost the word, but different types of decks. One
Yeah.
mobile version, one desktop version, just to keep it simple.
And just on
Okay.
that, I mean, the average time that an investor spends reviewing, and because
Yeah.
it's so high level, is 26 seconds, right? So
Yeah, that's
you
incredible.
either capture that potential investor's attention in 26 seconds. And
Yeah.
95% of investors are looking at this. Even if you're emailing it, they're still looking at it on a mobile device, right? They're not
Yeah.
looking at it on a laptop or
Yeah.
desktop. So you need to understand that when you email yourself a pitch deck, look at it on your phone and
Yeah.
see whether you can read what you've written on the phone, right? Because
Yeah.
most
Yeah.
people make this critical mistake.
Yeah. So interesting 26 seconds. So it used to be the 30-second elevator pitch. That's now reduced as a 26-second elevator pitch.
Absolutely.
Okay, good. Great. Then just what are some of the mistakes, obvious mistakes, in terms of the foundation of a pitch deck? What would be some of the things not to do and the obvious things that listeners can take away?
So I think the first one is, and it's quite obvious, but don't make spelling mistakes, right? So
Yeah.
um, don't have heavy text, heavy kind of slides. Be realistic in terms of your positions. People that say they have no competitors, for example, I just call BS on that, right? So um,
Yeah.
you got to be very careful that investors see thousands and thousands of pitch decks.
Mm.
They know what they're looking for. You've got to understand your audience and who you're pitching to and pitch it accordingly, right? So there are oftentimes when we would, tweak our pitch deck based on a particular investor profile. Some
Yeah.
of the other mistakes, um, when we see, 30 slides or 40 slides or 50 slides, you've lost that investor, right? Like if they've
Yeah.
got, they don't have the time to go through 30, 40, 50 slides, right? So don't don't
Yeah.
don't give them a deck of 30, 40 slides.
Keep it simple, and you can always
Yeah.
have, I think you show you have your backup slides or your appendix. So you keep it simple. They've read the gist of it, and then they can, if they want to, they can scroll through an appendix where maybe you've got a little bit more detail on the financials or whatever the case may be. But yeah, I like to your purpose. The first thing you said is about that hook, and if you're not gonna catch anything if you're gonna inundate them with information. Okay, good. And then
No heavy
some,
video content. Sorry, I just want to come back. No heavy video content because again, 9 out of 10 times the
yeah,
person's looking at it on their mobile phone. Links, external links are a no-no.
yes,
Because
yes,
somebody's
or
gonna have to click on something to go somewhere else to see you've lost that person already, right? So,
yeah,
these are simple things that we often get wrong, right? And we got it wrong. Quite frankly, initially we got all of these things that I've telling you wrong. Make
yeah,
sure your cover email is targeted, right? So don't send a generic cover email. If English is not your first language, ChatGPT is fantastic at writing amazing email
yeah,
cover emails and so forth, right? Um, so the AI tools that we never had when we were starting out QHop, right?
mm,
That startups have access to today, and I would really encourage you to use those tools extensively.
yeah, yeah, absolutely, absolutely. So touching on, just conscious of time, visuals and design tips. I mean, maybe just give a couple of thoughts around that. I mean, these are obvious, but maybe something that you've picked up in your experience with regards to putting a deck together.
So, you know, keep it simple, right? Like the most important thing is less words, is better content consumption, right? So,
Mm,
don't put a whole CV of your team members and so forth. Put a LinkedIn profile link. And, if somebody wants to go and read up more on who you are and what you've done, they can go into LinkedIn and go and read up all about you there, right? Um, you know, Bullet points are better. Financial
yeah,
projections, you don't have to put 10-year projections or 5-year projections. Put the highlights, the key matrix that drive your business that will whet an investor's appetite in terms of return on investment, what traction you've actually achieved. Use logos, don't write long paragraphs about, oh, you spoke to Mr. X at Waitrose and, he's loves your kids and, it's all irrelevant, right?
yeah,
Investors
that's
simply want to know
exactly.
which brand are you engaging and are they interested and are, what level of commitment, how they're showing your business, right? So I think those are the kind of key things. Keep it simple colors,
Yeah.
like we've seen, like, you don't want a neon presentation, right? As much as you are fighting for attention, there's
Yeah.
the right type of attention you want to fight for, not the wrong types of attention you want to be fighting for.
And also the opposite, don't have it too bland,
Mm.
you got to try and keep it. I mean, look at your backdrop there. We'll see the perfect pitch deck soon. So I think it's a good time to move across to the real examples. So um, I'm going to flick through the slides. You tell me where you want me to go, AJ, just to keep it simple that you're not going to have to share your screen.
Sure.
So this is your first deck. Tell us a little bit more. Do you want me to actually change it out of presentation? Because then you
No,
can
no,
see the
no, you
next
can leave it
slide.
in leave it in
Leave
presentation,
it
right? So,
here. Okay.
yeah. So,
Because
you
otherwise we
know,
could see the next slide on the
let, let
side.
me let me start off by contextualizing CERT and QOP, right? So CERT is the holding company of QOP. QOP is one of the solutions that's in the CERT stable. And initially, we thought we had a fantastic investor pitch deck, right? Remember, I'm a chartered accountant. I come from a corporate finance background. I've raised capital. I've done a 1 billion rand deal and so forth. So we thought we had the best pitch deck since sliced bread, and it actually turns out that we had one of the worst pitch decks that our US investors and others had seen. And so there were so many lessons that we learned along the way.
And they gave you feedback, right?
Absolutely,
Yeah.
so I want to kind of just start with this covering slide, right? So this cover slide has some contact information. It has an investor pitch deck. Now, if you're sending somebody a pitch deck in a covering email or in a WhatsApp message, you don't have to put investor pitch deck on your cover, right?
They
It's
know it is. Yeah.
inherited inherited in the purpose of why you're sending them, right?
Mm.
Using data to improve decision making says nothing. It communicates absolutely nothing in terms of what your business is, what is the problem that you're solving, how do you solve that problem, what makes this interesting, because everybody uses decision data to make
Yeah.
or improve decision making, right? So
Yeah.
it's such a bland statement. And then the graphics and so forth is quite overpowering, right? So when you look at the slide, as much as that graphic is a very cool graphic, and I thought it was certainly a very cool graphic, it overpowers the
Mm.
entire slide, right? So it's drawing attention away from what you want.
True.
The logo is way too big, it's also dominant and it's competing from a color and a schematic
Mm.
perspective with the background, right? So there are
Yeah.
so many no-nos on this slide.
You're looking at the finger, not at the info, and then also the info is also not relevant.
That's right.
Yeah.
Let's flip through. So I just want to give you a sense of, okay, about us. So, we thought, everybody needs to know who we are and why we exist, right? And actually nobody cares, right? Because
Yeah.
everybody's got their own reason for existing. What we failed to do in the initial pitch deck is to tell a story, right? Is
Yeah.
to find something which investors can relate to, and a story that is consistent in terms of a thread from the first slide right through to the last slide, right? Again, busy, lots of text here, unnecessary. So, business data insights enables large corporations. So, that tells you a bit about our target market, reduce costs, improve operational efficiency. So, that's what the benefit they will receive. Again, fantastic construct, wrong place, irrelevant from an investor perspective, right? So, as an investor, I want to know what is the problem that you're
Mm.
solving, a big enough problem, and how do you solve that problem, right?
Yeah.
If I don't
That's
get
your
that in the first few slides, I don't care. I've 26 seconds, I've moved on, right?
20 seconds gone. Yeah.
Exactly.
Okay.
So
Next one.
now we get to our purpose, right? But again, the purpose is a repeat of what was on the first slide, right? So I've
Yes,
really
it's not the
not told you
problem.
anything new, and I've used all this real estate from a slide perspective, repeating what I had on the first slide, right? Waste of time, nice graphic, and it looks great, but it actually communicates very little or nothing, in fact, that is new to the investor, right? 20 seconds, I'm
Yeah.
already in now. I've lost the investor. Investors moved on to the next potential pitch deck. Next slide.
Yeah.
Okay. Yeah, we convoluted. So like I said, CERT had a number of solutions, right? Um, from food waste to retail technology, customer experience, retail supply chain monitoring, right? So um, an investor doesn't want to invest in multiple businesses. They want to invest in a single solution which solves a single
Mm.
problem that they can understand and relate to. So what we needed to do actually was to create four different pitch decks for four different types of investors. So there's some investors that will only invest in hardware and hardware related businesses. There are other investors that will only invest in, SaaS type opportunities, where there's annuity revenue streams and so forth. And so trying to pitch four different options, four different business models to a single investor was a disaster, right?
Mm.
Um, so what we
Made
did,
it complicated to make a decision.
exactly. And so you've lost the investor again because you've overwhelmed them with too many opportunities. They don't know what you do and they don't know what they should be focused on. You can go
Yeah.
to the next
Okay.
slide, Jay.
Makes sense.
And then
Okay.
we
I
try
mean,
to
you still, this is good that you're showing the problem statement, then your solution. I mean, I think, but I mean, obviously it should have been sooner, and we will see that later. But yeah,
yeah.
carry on.
And then here again, we're trying to show multiple solutions. And then there's these big numbers, right? So
Mm.
convoluted rands here with dollars,
Yeah.
right? So you must understand if you're pitching to a local investor, put everything in rands. If you're pitching to international investors, put everything in dollars, right? Or euros or pound sterling, right? Um, trying to, and then again, like I mean, there's too many bullet points here. There's it's a very um, wordly slide which doesn't communicate much.
Yeah.
You can flip through the
Okay.
next few slides, right? So I just want to get
Few
to the,
slides.
yeah. So again,
Okay.
here's our products now. Here's our market potential. Um, 3 to 5%. Again, here's our competitors. So you'll see we've got all the slides that we said should be in an ideal pitch deck, right?
Mm.
The problem is it's so badly put together. We couldn't raise a single cent with this pitch deck, right? And we pitched this extensively, right?
Mm.
Why we are different. So all of the core ingredients were there. It was just poorly presented.
Yeah. Okay. Okay. Yeah. This one, I'm sure you can give some
Let me talk a
detail
bit
on.
about this, right? So this is such a bad slide. Okay, so firstly, nobody cares about what you look like, right? So pictures of people is quite frankly irrelevant, right? And then long, wordy CVs are even more irrelevant, right?
Yeah.
So again, what I want to do is highlight the things that investors are interested in. Um, so age, experience, those things are important. Which companies you work for, bigger brands attract
Yeah.
more attention. Real relevant experience to this particular investment opportunity is more important. So what if I was a travel agent, when I was a teenager? It's completely irrelevant to selling a technology solution unless the technology solution is in the travel industry, right?
Yes. Yeah.
Finding the relevant experience based on the investment opportunity is more important than having like your whole history of where you started working and where you are or what you've done today, right?
Yeah.
Um,
Okay. I know that, I mean, I've got some questions, but I know I don't want to give away too much in
sure.
terms of what you show later. But
So
yeah, that's a good example of a bad example.
yeah. And then the next slide, we showed who our kind of core partners are, right? So, I mean, they are limited cloud platform partners, right? It's either Google or it's AWS or it's Microsoft, right? So, putting those logos there, as much as it's great, was actually irrelevant, right? Because there was an IoT component to this, uBlocks and JT Telecoms were important because investors that were investing in that kind of knew those global brands, right? And then strategic
Mm.
local and hardware and software partners, again, this is irrelevant, right? An investor doesn't care who's going to supply you with your hardware devices, and because none of them know these companies. These are not well-known global brands that everybody and everybody would know. These are other startups in this kind of space as well,
Yeah.
right? So
So
again,
irrelevant for
irrelevant,
your pitch. Yeah.
and not convincing an investor that you have the right brands and so forth behind you that are backing you, right? You can go to the next
Okay.
slide.
That's a timeline.
Timeline, it looks
Okay.
fantastic because it looks like you've
Yeah.
been around for a long time, but actually, again, too wordy. I would show 3 years or so, or three kind of key milestones of achievements that you've achieved, right? Um, the rest of it is irrelevant. It's
Yeah. It's
too
too
much
busy.
information.
Yeah.
Yeah, too busy. When you have 26 seconds, I'll spend 10 seconds just or scanning this slide alone, right? Irrelevant.
Yeah. Okay.
Again, some
These are awards you've
achievements
got.
and awards, great, but nobody reads all of this, right?
Yeah.
Uh, Carry on.
Here's your
And then
business
the
model.
business model, wait, like I look at this now and I cringe actually at how bad it actually is. I can't believe we thought this was the best thing since sliced bread. But again, what are our revenue drivers? How do we make money? And what are our cost drivers, right? So it gives an investor the understanding of what, how do you make money and what are your costs, right? So what are they going to be buying or investing or funding, right?
Yeah. Okay.
Next slide.
Your
Oh,
financials.
again, when I look at this, I still cringe, right? Like big numbers don't impress investors, right?
Yeah. Yeah.
Show realistic numbers, show something that's tangible. They see the billions and trillions all the time. They get turned off by the billions and the trillions, right? So if it's too good to be true, it is too good to be true.
Yeah.
So show realistic numbers, show numbers that make sense, right? And then I'll ask,
The ask. Yeah. Important slide.
important. You got to tell people what you need or how much and what you're going to use that for, right? But
Yeah.
more importantly, tell the investor what kind of a return expectation they're going to get, right? So that's completely missing here, right?
Yeah.
Um,
Yeah. I
so
think I mean, obviously, um, that's almost a no-no in my perspective. I
yeah,
want to know if I'm investing whatever amount is, you want to know exactly what you're going to potentially get out. And if that's not shown, then it's a worry for me.
sure.
Yeah.
Okay, so
And then you
the
finish
next
up.
finish up. I mean, look at this. The confidentiality and disclaimer. Again, a pitch deck is not a confidential document because it's going to be shared with anybody and everybody, right? So
Yeah.
take this crap out, right? The disclaimer, everybody knows a pitch deck. An investor knows they have to do due diligence. They're
Yeah.
gonna have to do all of those things, right? They can't rely on a pitch deck, and nobody writes out a check on a pitch deck, guys.
Yeah.
It never happens, right?
True.
So
True.
take all of this. It's irrelevant. It's unnecessary.
Yeah. Okay. Okay.
Okay,
Let's
so
get
let's
to
look at
the Rolls Royce now.
yeah. Um, so just to give you some context, right? We were involved in GSD Venture Studios. We were selected to participate in one of their cohorts. GSD Venture Studios is one of the top 10 Silicon Valley accelerator programs. It stands for Get Shit Done, right? It's the famous Mark Zuckerberg phrase. Uh,
Okay.
and this statement on this opening slide, right? QOP is a quick contactless checkout solution with hyper-personalized marketing. It took us 3 weeks to get to that statement, right? It started out like much longer than that, and we trimmed it down, changed words. And,
That's
and so you
amazing.
think about how that gives the investor an understanding of what do you do, right? Who are you and what do you do? We're a
Yeah.
quick contactless checkout solution, right? So it's retail checkout with hyper personalized marketing, right? So hyper personalized, it's personalized to you, and there's a marketing component to this, right? Um, Very clean slide compared to that first slide.
Yeah.
There's our logo there. There's a trolley there. Colors are similar. Much cleaner, neater
And
slide.
everyone relates to it. So they see everyone knows what a shopping trolley is, and then they read that, and there's a connection.
Absolutely. And then at the bottom there, we deliberately put those few things, right? So as an investor, I want to quickly decide whether this is in my wheelhouse or outside of my wheelhouse. Now, if I'm looking at software, and AI, then this appeals to me because I see the word AI there already, right? So now I want to see what am I doing in AI and so forth. If I'm investing in reseller software resellers, I'm not even going to bother looking at the rest of the slides because it's outside my wheelhouse, right? So
Yeah.
putting down there which investor wheelhouse you're actually pitching to helps the investor to decide, do I waste my time going through the rest of the deck or do I just pass, right? Um, and so that's important, right?
Yeah. And that
Now,
covers, and it's simple. It covers a lot there, and it shows the diversity of what the product is and where, the different sectors.
and remember, this was done a number of years ago, right? So we've, at that time, these were the buzz industries or subsectors that investors were looking at investing, right? So again, look at the trends in venture capital, look at where money is flowing into. So AI is a big area of investment at the moment. So if your solution has an AI component, put
Put it in
down
there.
that
Yeah.
there, right? Because that's
Hmm.
going to attract the interest of potential
Yeah,
investors.
it widens your net. Just a
Yeah.
question on the colors. Anything behind the green? Was there any? What was your thinking and thought around green?
So it's again fresh, new, it's a vibrant
Okay.
color. And so we chose that largely. And I have affinity. It's one of my favorite colors as well. So personal affinity.
Okay, good, good. The
You'll notice my
Springboks are
glasses is
green.
green. I do a lot of personal branding. So yeah,
Okay. Not quite the Springbok green, but it's close enough.
yeah. 50 shades of green, if you ask me.
Yeah. Okay. Are we doing time-wise? Okay, we've got probably another 7 minutes or so, and then we can open up questions. Do you want to
Okay.
want to just crack
I'm
on
going
now
to
then?
Yeah. So again, here we talk about our achievements, our team, and our awards. If you don't have awards and if you don't have major achievements, that's fine. You've got to find the three things that differentiate your business, and that would be appealing to an investor, right? So that's what you want to grab the attention.
Yeah.
Use the big brands here, GSD Venture Studios, Microsoft. These are global brands that investors know and I have confidence in. Brand South Africa, AB InBev, Kroger, these are big retail brands and so forth. So that gives the investor the confidence to say, actually, I can recognize these brands. I'm now interested to look at this even further.
Yeah. So I think you said things that you're proud about, put that up front.
Absolutely.
Yeah.
The next slide talks about, okay, so I want to spend a
Straight
minute.
into the problem.
Yeah. And if you can make your problem relatable, right? So ask a question, ask a tough question, or make a strong statement, right?
Yeah.
So, and the question we ask here is, have you ever abandoned your basket due to a long checkout queue? And 99% of people that we've ever asked that question to, the answer is a resounding yes, because we
Yes.
all do it,
Yeah.
right? At some point in our lives, we all do it.
Yeah.
And the minute the investor can relate to an experience that they've had, you've already hooked them, right? So you've got them interested to say, actually, I have. And if I am experienced that, there must be thousands or millions of other people that have experienced that as well. So the next thing you need to explain is how big of a problem is this, right? So it could be a personal problem or it could be a very pervasive problem. In this instance, it's a $4.6 trillion problem annually for retailers, right? So that gives you a sense of how big a problem we're trying to solve, right? And then that is substantiated with independent third party source information. It's not me pulling something out of my thumb. It's independently verifiable data that we've based our problem statement on.
Yeah. No, just on the emotions, it's important. I mean, just something that I relate to. We invest in student housing, and the best person to invest to is someone that's studied and lived in terrible conditions. They know that, okay, and their children are not going to go to that. They know that it's a sound investment. So yeah, you got to touch on those emotions to get them interested.
And then
Um,
the
this
next
one,
slide is again our solution, right? Brief, quick, like minimalist, we are a scan, pay, and go solution, right? So show
it's a
that,
simple
you're
slide.
not
Yeah.
simple slide, visuals are telling as well. We don't use those guns that you see at Waitrose, those
Yeah.
handheld guns. We're using a mobile phone. We scan barcodes. We have different payment methods, and you pack your goods and you leave the store, right? So it's quick and simple. So few words compared to those other slides, which had lots of words in there.
Yes.
If people want to see actually how it works, they have a choice to scan a QR code or to click on that link, and it will take them out of the presentation to so this is again, I want to simply whet your appetite, but if you want to see something more, I'll give you the option.
Mm. Yeah. Okay. And then on to, we should be getting close to the business model. There we go.
So again, in it's wordy, but the bold, big highlighted stuff, if I'm scanning this on a mobile phone, I'm going to see B2B. So if I'm a B2C investor, I can skip this and go to my next pitch deck, right? So you have to tell the investor the type of business model that that they would be investing in, right? And then how do you make money, right? Like data monetization, big buzzword back in the day, so that's why we kind of showed this, right? How do we charge, or how do we make money? And then how do we really give them that 10x, driver of return that they're expecting?
Yeah. Yeah. So, okay. That's your simple business model, two-step. Okay. So
Again,
now this is the opportunity, right?
yeah. So, why are we well positioned to take advantage of these market trends, right? So these are general market trends, but it's again in the context of what are we selling and relative to these market trends, right? So find the most relevant third party verifiable, information. And, like if you're using McKinsey or Boston Consulting Group data, there's a high degree of credibility because those brands are well known and so forth, rather
Mm.
than, Joe Soap, said the compounded annual growth rate is going to be 61.4%. I don't know if I can believe that or not, right?
Yeah. So realistic, but also I think what is nice is you've shown a graphic. It shows the growth with the line going up, and then obviously there's a bit more detail on the left.
And again, you'll notice that we highlight certain things in green and bold, right? So when I'm scanning, when I see 101 billion, I see 820 billion in 2026, I see it gives me a sense that actually there's a big opportunity here, right?
Yeah, yeah. Double digit and percentages and B's next to the dollar sign, not M's.
Yep.
Um, okay, this one. This is now a bit of a track record, right? Or
Yep.
traction. Traction. This is your where you're at.
Yeah. So again, um, pre-revenue. So you're not, if we were post-revenue, we would have this is our compounded monthly increase
Yes.
in revenue, et cetera, et cetera. Pre-revenue, trying to show them a sense of the brands that you're working with and what traction you've actually made in terms of those relative brands, right? So it shows the investor that there's something, and there's big brands, global brands that are interested to participate or pilot your solution.
Okay. This
And
is
then
your ask. Yeah.
how much are we raising? How much have we raised already? How much are we looking to close? What is the gap? And then what is the next round of capital that you're seeking, right? So you're giving investors a clear sense that this is one of multiple capital raises. You're giving them a sense of what you're raising now, 1.7 million versus 17 million, that's typically the good ratio, 10 times more in your second round Series A. And then what are the return expectations over what period, right? So this needs to be really realistic, that people have confidence, you know what you're doing, and always, always undersell you. You need to be very, very clear
Yeah.
about how you're going to achieve your return expectations, right? Don't, don't put things that look great, because if it's too
Yeah.
good to be true, it is too good to be true, right?
Yeah.
No, invest in
And
that.
yeah, don't rather under promise and over deliver.
Deliver. Because remember, your
100%.
investors that come in this round are also going to be follow-on investors in future rounds,
Yeah.
right? So you want to build confidence that they see they can trust you, and the more they trust you, the more they'll invest in you.
Yeah. And the word of mouth gets around, and all of a sudden you've got new investors. So 100%. And then,
And that's it,
yeah,
right? Then
that's it.
nothing fancy contact information so that people, if they're interested, they know how to get a hold of you. And then beyond this, there's a whole lot of backup slides, right? So if I'm talking to an investor
Yeah,
and I want to reference something in the backup
this
slides, I
is,
can pull that up.
I'm just
I
going to
can
flick
show,
through them. Yeah.
um, and again, you can see
There are your
these are,
photos.
and there's the photos and there's the detailed CVs, which I still hate. But if they want to read this, they can go and read this, right?
Yeah.
So
Okay. Okay,
cool.
so that's great. I mean, that was amazing, and I think what I like is just the color. It's just simple. It's clean. It's easy to read, not complicated. And if there is any color, it's the brands that you were referring to as your partners. So really amazing presentation or pitch deck. So maybe just to touch on a few things for the investors out there that are listening today. What any tips for investors when they're reviewing the pitch decks and some obvious no-nos and concerns to look must do for investors? Just quickly a few bullets on that.
So again, my appeal to investors is, startups spend a lot of time doing pitch decks, right? Afford them some level of, respect by spending more than 26 seconds,
Yeah.
doing a pitch deck, right?
Love that.
Um, I think you must understand it from the startup perspective and that owner and the passion that they exuding and so forth, right? So spend a little bit more time than just briefly scanning and deciding yes or no, right? Um, the other thing that I would say is, look for the basic things, right? You want to back a team, you want to back a jockey, rather than the horse, right? There
Yeah.
are a number of horses, and that's why that competitor slide is important, right?
But also, just to add to that, you said it the other day, is not only just it must be a complementary team, a team that
Yeah,
complements each other. I think that's a key thing to look out for, right?
absolutely, right? So, you know, techies often get highly motivated by making something sexy that's groundbreaking, but actually groundbreaking doesn't solve a real problem, or the market is so small for that groundbreaking initiative that you're never going to get your 10x return, right? So it's trying to find that balance also, and the team enables you to do that, right? So find people that are industry experts and that have, find techies, find business people, find that right mix of skills that complement you as a founder that you don't
Mm.
have. So find the people that are going to give you that edge, rather than all people that think the same and look the same and have got the same experience, right?
Yeah, so for an investor, when they're looking at the track record of the team, make sure they're not just relying on on
Hmm.
on one individual. It needs to be the whole team. So,
And there's
okay, and
diversity
then
in the team as well, right? The importance of
yeah,
diversity in the
any
team.
anything else for investors? I mean, must do's. I mean, that
Look,
shouldn't be
I
an
would say
apostrophe there, my
I would
mistake.
say, if something interests you and if it's in your wheelhouse, do a short meeting, right? Give the startup that opportunity. Sometimes, people are really bad, like we were at pitch decks, but I think we have a fantastic solution, right? And when you talk to the founder and the team, you really get to understand the gravitas of what's
Mm,
actually presented, right? You can't get that by reviewing a pitch deck, right? It's that human connection, right? At the
yeah,
end of the
the
day,
chemistry.
yeah, we want to back people that are passionate, that know what they're doing, that have got experience, and even if it's not this opportunity, there may be other opportunities down the line that you may be interested to invest in. So I think as investors, give startups that are in your wheelhouse, that fit your mandate, that have the right level of traction and, advanced stage, the opportunity to just talk to you.
Yeah.
It's a 10-minute or 15-minute call. You know, I think you'll gain a lot out of that compared to just reviewing a pitch deck and making a go, no go decision based on a few slides.
Yeah, true. And I think the way, with Zoom and Teams and all these, we can do 10-minute pitch decks, before you didn't have to travel in, meet the person.
Yeah,
So, I mean, I think investors give the startups, the VCs, whoever you're looking at the opportunity, even if it's online and over a call.
yeah.
And any must-dos for investors? or that's where you've covered that.
I think I've covered that, but I
Yeah,
think sometimes investors look for the reasons not to. So we've incurred
true.
investors that say there's a spelling mistake in
Yeah,
the cover email. I'm not even going to bother looking at this, right? Now, I understand they have a set of criteria that they apply to sift through the thousands of decks they get a
yeah.
day. Um,
Yeah, I had that
Sometimes,
example at an event. I think I told you.
yeah.
The guy said if the cover email's got a spelling mistake, he won't even open the pitch deck, which is pretty brutal.
Yeah.
But he like you say, he's probably looking at thousands and he needs to screen stuff. So, but yeah, you're right. Maybe yeah, I've made a spelling mistake on this. It shouldn't be an apostrophe on do's. Probably people don't know that, but I've got a colleague that's absolutely anal about that type of thing. So we make mistakes. Yeah.
And we're human, right? I mean, as
Yeah.
long as your email is not riddled with like spelling mistakes and typos and grammar errors and your deck is I would never look at something like that, right? Because if you don't
Yeah.
have that level of attention to detail, that's the kind of investor that's not going to pay attention to the small things in their business, right?
Yeah.
Uh,
True.
so that it's a reference to character and nature of the startup. So be aware of those things as well.
Okay, good. Okay, excellent. Great. I think we're coming to questions. Thanks, the great. I'm a junior investment manager in private equity, high net worth space. How do you weigh the importance of content versus visual design in a pitch deck? Do you find that strong visuals and marketing appeal can be just as impactful as the core message itself? So
I,
we,
I
we
think
did touch on that. Maybe just reiterate.
I think it's a combination of both, right? I mean, these days I can pay somebody on Fiverr like a couple of hundred rand, and actually they'll design the most fantastic looking pitch deck, right? But if there's no real substance in terms of team, in terms of market opportunity, size of opportunity, etc., you're wasting your time, right? So, of both, it needs to be visually appealing,
Yeah.
but also there needs to be substance behind that, great looking pitch deck.
Yeah. Otherwise, if you more balanced approach, if you drop low in one, then you're gonna miss it. So it's a balance.
Absolutely.
Another one here. What's your view on including traction if you pre-revenue or pre-product? Or you had a traction slide there.
So you have to
So
show traction, right? So whether you've developed the idea into some MVP, that's traction, right? So you have to put your best foot forward, right? And as much traction as you can possibly show it, right? Because that's what investors are looking for. Investors want to know you don't only have an idea in your head, that you've actually done something about that idea in your head, right? You've
yeah.
done some research, you've done some market match and understanding if the market is willing to buy your solution, how much they're willing to pay for it, et cetera, right? So doing all of those things gives the investor the confidence that you've gone out and actually tried to understand whether there's a real market for your idea or your solution.
Okay. Okay, good. I see. Thanks, Grant. You're asking for the pitch deck. This one we can share, and obviously you can use that as you please. Would you note the ideal investor profile? So would you kind of indicate who you wanting to come into, or do you do that?
I wouldn't do it, right? Because again, I think we're
You
all
may put
looking for
someone
the
off.
same thing, right? We're looking
Yeah.
for an investor that's going to write out a check, firstly. So that's the first thing. The second thing, you're looking for somebody that's going to add strategic value, right? And thirdly, you're going to look for somebody that's going to give you either new market access or do a follow-on funding round and so forth, right? So we're all looking for the same thing.
Mm.
Um, I think investors sometimes move out of their wheelhouse or they may be transitioning, so I wouldn't put out a list because the minute I can see something that I don't tick, you've lost that investor, right? So I
Yeah.
wouldn't. I would put out what I'm looking for, but again, I think we're all looking for the same thing. It's
Yeah.
it's
You won't state that necessarily that it's only for institutions,
yeah.
for argument's sake, if you're looking for capital from high net worths or whatever.
What I do would say, right, is you have to understand your investor base, right?
Yeah.
It's senseless trying to go through a laundry list of potential investors or VC funds spend the time to see which VC funds are investing at your stage where you find your startup, right?
And
It
focus
senses
on that.
trying
Yeah.
to, yeah, if you're at the ideation stage, it senses looking at a post-revenue investor, right? It's a mismatch, and that's why 99% of investors will say no because there's a mismatch, either mandate mismatch or stage of investment mismatch, or you know, it's outside of what they are typically investing in. So understand who you're pitching to first, and
Mm.
don't do spray and pray, right? Like spray and pray doesn't
No.
work.
Yeah.
Do targeted. You'd rather spend your time targeting specific set of investors because you'd have a higher probability of success doing that than doing
Yeah.
spray and
So do your research preparation before you do your pitch. Okay,
yeah.
and that's actually so interesting because it's so like I think of the elevator pitch kind of example when you're in an elevator and you know, you're standing with someone there and you want to tell them what's going on. You actually need to try and figure out who they are, who you're talking to here, because your whole elevator pitch will change depending on
Mm.
that person. This guy may be a multi-billionaire or he may be just a retail client. So you just need to, anyway, it's so important to do your prep and try and read the situation. Nick Sachs, thanks Nick for sending through a question. How can storytelling be effectively integrated into a pitch deck without feeling forced? No, good one. That's always a
I think it's a
challenge.
great question, Nick.
Yeah,
I think it's got to be authentic, right? I think don't try and concoct a story for the sake
yeah,
of to make a story, right? Make it personal, right? So if you can make it personal, you become more relatable, and people invest in people. People don't invest in an Excel spreadsheet which shows projections, right?
yeah,
Or a deck that shows you fancy graphics, right? So make it relatable, make it something that's personal, make sure that people understand why have you decided to solve this problem, right? Because that's the best story to be told. And not everybody's going to buy into your story. It's also okay. It's acceptable,
yeah,
right? You have to develop a pretty thick skin as a startup, right?
yeah,
Like because you're going to get so many no's. It's not funny, right? But it's okay.
yeah,
You're looking for the one yes, not the thousands of no's, right?
yeah. Yeah, 100%. It's a numbers game. You got to be prepared to deal with the no's. So, but yeah, to get a story, telling a good story, being authentic to me is key. And try and bring that authenticity into your pitch deck. And
And
that's
the
where you were
passion, right?
talking about the emotions and touching on the emotions.
And the passion. Just talk passionately. Why? And
Yeah.
if they ask you any question, if you don't have the answer, just be bold enough to say, "Look, I don't have an answer to that." Right? Let me
Yeah.
think
Come
about it.
back. Yeah. Yeah, exactly. Okay, I think we're coming to 4 minutes left, so we are almost done. I think there are no other questions coming in, so I just think let's take the opportunity to close. That's been super insightful, AJ. I've learned a lot. We had a pre chat. We've had this chat today, and just hearing you and hearing your knowledge and expertise and what you're going through. I mean, I'm in the game. I'm also a capital raiser, so a lot of it resonates with me. So thank you very much for your insights and opportunity to talk to you. And I look forward to working with you more with the Wealth Creation Club. Thanks everyone again. Go tell your story. Go and get those meetings. And good luck. And it's great to have you all part of this second webinar, educational. And a big shout out, thank you to AJ for your insights. It's been really, really fun chatting to you today.
Thanks, Jason. And yeah, my final parting kind of note is, I think we have an amazing set of startups in South Africa, cutting edge, right? Like, I mean, when I went to Silicon Valley and so forth, I can tell you there's nothing special about the air or the water there because I tasted both. We actually can hold ourselves up with great pride in terms of competing on a global scale from a technology perspective. So investors, put your weight behind the Wealth Creation Club. I think you will be very, very surprised in terms of outputs and outcomes and returns that you could expect.
Brilliant. Thank you, AJ. And yeah, give them more than 26 seconds. Okay. Good day, everybody. Thanks so much.
Thank you. Bye bye.
Bye-bye.